My dear bcom students, మనకి అడ్వాన్స్డ్ అకౌంట్స్లో we have an important topic. The important topic is the differences between preference shares and equity shares. Equity shares versus preference shares. You know there are two kinds of shares like preference shares and equity shares. Equity shareholders are real owners of the company. However, by giving some preferences, a company can issue preference shares for the purpose of raising capital. Here the following are the important differences between equity shares and preference shares. The question is why we need to learn means we have a topic like company accounts and issue of shares and debentures likewise. In my coming video, I will also explain about the differences between shares and debentures. My dear students, if the question comes, write the differences between equity shares and preference shares as it is given in the year 2021. Recently the question has been given in the exam. The first difference is the preference. See, in case of equity shares, there is no preference in payment of dividends and repayment of capital. See, when the company earns profit, the preference will be given to pay dividends to preference shareholders first. That too, they will be paid a fixed rate, means 8% or 9% we are going to give. But whereas in case of equity shareholders, they don't have any preference in getting dividends. Dividend అంటే ఏం లేదమ్మా, కంపెనీకి లాభాలు వస్తే పంచడం అనమాట. సో ఒక ఫిక్స్డ్ రేట్ ప్రకారం పంచుతారు ప్రిఫరెన్స్ షేర్హోల్డర్స్కి. బట్ వేరేజ్ ఈక్విటీ షేర్హోల్డర్స్ విల్ బి గెటింగ్ ఫ్లక్చువేటింగ్ రేట్. ఇట్ మే బి fluctuating, like it's not fixed. At the time of winding up of the company, when the company is being closed, before any amount to be paid to equity shareholders, preference will be given to pay preference share capital. They are having preference in getting dividends and repayment of capital. And in case of ownership, the equity shareholders are considered as real owners of the company. However, preference shareholders are, though they are shareholders, but they are not considered as owners of the company. So voting right. Actually, equity shareholders can participate in all the meetings of the company and they are having a right to vote in election of directors or someone. But whereas preference shareholders are not having any voting rights. In some cases, they may get voting right, but most of the cases, preference shareholders are not having a right to vote. Why voting means there is election process will be there for directors of the company. And convertibility means equity shares cannot be converted into preference shares. However, preference shares can be converted into equity shares. That depends on the conditions. Then participation in management. Actually, equity shareholders will participate in management of the company. Preference shareholders won't participate in the management of the company because they are not taking the risk. So risk takers will be given priority in participation of the management of the company. Redemption means repayment. Equity share capital once issued cannot be repaid by the company. However, in case of preference shares, the preference share capital will be redeemed, means paid back after 5 or 6 years likewise. The nature in the sense, actually equity shares are real owners in the nature. They are the risk takers. They will take the amount after payment made to all. But whereas in case of preference shareholders, the nature is that they always have some preference in payment of dividends and repayment of capital. That is the nature. Okay. So these are the differences between preference shares and equity shares. So one should learn in your material whatever you purchased it is having, but consider this class also. This is differences between preference shares and equity shares. My dear students, you know share is a part of company's capital. Companies will issue two kind of shares like preference shares and equity shares. Actually, equity shareholders are considered as real owners of the company equity shares are listed in stock exchanges. Means that they can be changed the ownership. Means a person can buy the equity shares. But preference shares are not listed in stock exchanges. They cannot be bought. Means next one is preference. Who is having preference? Means equity shareholders are not at all having any preference in payment of dividends or repayment of capital. However, here the preference shareholders are having all kinds of preferences. My dear students, consider this very important class. This is a repeatedly asked question in advanced accounts for BCom third semester. I wish all the best. Hope you understand something. So differences, when it comes, you have to make two columns, one side equity shares, second side preference shares, and here the point of differences. These are the 7 points of differences. If you want to write voting right, the equity shareholders are having all the voting rights. They can participate in the company meetings, they can vote, whereas the preference shareholders are not having any right to vote. Convertibility means the equity shares cannot be converted into preference shares. However, preference shares can be converted into equity shares. Okay. These are the differences between preference shares and equity shares. Redemption means repayment. So, repayment of capital. Equity capital once issued cannot be repaid. However, preference share capital will be repaid by the company after 5 or 6 years. These are the differences, my dear students. Hope you have some idea on this. Make use of the video. Please like it, share it. Please subscribe to my channel.